BlackRock, VanEck, Valkyrie, Fidelity, WisdomTree, Bitwise, Franklin Templeton, Invesco and Galaxy have filed final amendments to their spot Bitcoin ETF filings with the US Securities and Exchange Commission. According to Bloomberg analyst Eric Balchunas, issuers are already starting a price war. Invesco Galaxy waived fees in the first 6 months. Fidelity set a low fee of 0.39%. But is everything so simple? Following BlackRock, Bitcoin's largest corporate owner, Grayscale Investments, has rewritten the application for its spot Bitcoin exchange-traded fund, ETF, adopting a cash pool model instead of an in-kind model. But Grayscale Investments warned of adverse consequences. A product traded on a spot commodity exchange that uses only cash creation and settlement and does not allow creation and settlement in kind is a new product that has not been tested and may be affected by any operational inefficiencies arising in as a result, the company said in a filing with the US Securities and Exchange Commission, SEC. The trust can currently only accept and pay out money transfers. Grayscale has long sought to convert its Bitcoin trust, GBTC, into a spot Bitcoin ETF. Although the SEC initially rejected the firm's application, the court ordered the securities regulator to reconsider its decision after the asset manager objected. Many of the proponents of spot Bitcoin ETFs, including Grayscale and BlackRock, the world's largest asset managers, have pushed for an in-kind model. However, the SEC reportedly insisted on using a cash generation model for spot Bitcoin ETFs. The inability to facilitate the creation and redemption of assets in kind could have adverse effects on the trust, Grayscale said in a statement. Exchange products for all spot market commodities other than Bitcoin, such as gold and silver, use creation and redemption in kind as the underlying asset, the statement explained. Grayscale explained that this happens because there are fewer steps in the process and therefore less operational risk, due to the fact that the authorized participant can manage the purchase and sale of the underlying asset themselves, rather than depending on an unaffiliated party such as the issuer or exchange. Furthermore, the failure of the trust to facilitate the creation and redemption of in-kind assets may result in the exchange-traded product arbitrage mechanism not operating as effectively as it would with an in-kind asset, resulting in the potential for assets to be traded at large premiums or discounts, and such premiums or discounts may be material. The joy of the crypto market approval of new ETFs on January 10, 2024 is premature. The SEC's proposed way of operating funds without real ownership of Bitcoin will lead to absolutely unsustainable commissions, insurances, and risks that will completely discourage clients from engaging in this type of investment. In fact, approving such neutered ETFs would do a disservice to Bitcoin's capitalization and could result in the legal ban of any Bitcoin ETFs in the future, due to potential investor losses or broker and exchange bankruptcies. The Money Bitcoin ETF that could be settled next January is a Trojan horse, the same as the approval of Bitcoin futures on the Chicago Mercantile Exchange. Immediately after its launch, Bitcoin began to be manipulated by large capital and went into a long, unpredictable and volatile trend. What about the ETF? The date is already close. BTC continues to give dominance to the market. There is less and less strength for growth. ETH is still heavy despite the ecosystem booming. Arbitrum optimism broke all-time height, on which I congratulate all of us. In my humble opinion, if you remove all the noise and complex terms, we have 2 scenarios in the coming days, and we need to decide on it now and act before it's too late. 1. ETFs are accepted, rejected, and the market goes into a severe correction until the next narrative, such as the BTC halving, late spring. All your profits disappear, and those who did not manage to earn money are now in the red. 2. ETFs are accepted and the real bull run begins. Money is flowing into ETH as the market begins to price the ETH ETF as next. ETH is growing and unleashing the magic of multipliers, dragging with it first of all its ecosystem and then third-party blockchains. The market allows everyone who is ready to earn money and causes terrible suffering to those who did not enter. but even greater suffering to those who were on the wrong side during the feast? These two scenarios are the main ones in my head. Obviously, there are others, but I'm focusing on them because the cryptocurrency market has always seemed to me full of extremes. If you don't think about it now, then it will be too late, as I said above. Remember that your situation is always individual. Don't try to be like someone else. Your goal is to be better than yourself yesterday, and not to be better than that dude from YouTube. At the end of the day, stick with a strategy that works for you. Good luck to all of us and have a nice week.